Welcome to the NWR Virtual Resources Series. My name is Kerry Stevenson, and next up we have Ionic Rare Earths. ASX code is IXR. Joining me today is Tim Harrison. He's the Managing Director. Now, IXR have got a rare earths project in Uganda, which is an unusual jurisdiction, one I don't know a lot about. So I'm sure that Tim will share lots of what they've been doing out there and why Uganda is the place to watch. And of course, rare earths is very much in the news at the moment. Some exciting news out today as well, Tim, with awarding of an exploration license. So lots of news to share with our investors. So over to you, Tim.
Thanks, Kerry. Look, I'm going to give a talk today about what we're doing with Ionic and our plans to develop the Makuutu Rare Earths Project, developing critical and heavy rare earths and looking at supplying that into a number of Western markets where I think the demand is going to far exceed the supply potential. Looking at what we're doing with Ionic, the time is now. The time is now to develop an alternative and secure rare earth supply chain. So we've been looking at the development of Makuutu, which is a large ionic adsorption clay deposit located in Uganda. We've done a scoping study, which we reported earlier this year. We're working through a feasibility study and looking at a mining license application by about this time next year. Very simple, low-cost mining, near-surface mineralisation and processing via heap leach to make a mixed rare earth carbonate with no radionuclides. So it's an extremely attractive product. We're also looking at developing our own standalone refinery. Given that the bulk of refining capacity for heavy rare earths is completely dominated by the Chinese, we've identified the opportunity to develop a strategic, heavy and critical rare earth facility that can then supply critical raw materials into Western markets. So we're working with a number of groups, having a number of discussions with strategic partners and looking at the ability to put our product into those markets. The basket, we're critical and heavy rare earth dominant. We've got 43% magnet rare earths, which is extremely high compared to our peers. We've got a 44% heavy rare earth content. Again, it's at the high end of when we compare ourselves against our peers. And we've also got a lot of potential for scandium. And a lot of the opportunity or the desire to bring Makuutu into production is because our products are completely aligned with the desire to get towards carbon neutrality. So applications in both EVs, offshore wind, both forecast for substantial growth over the rest of this decade. Beyond that, it's anyone's guess. So a huge amount of desire to develop the project and to bring alternative heavy rare earth supply into the market. Looking at the ESG focuses of the company, we're doing a lot of work in Uganda at the moment on the environmental and social impact assessment, which will be required to support our mining license application. We're looking at also the rehabilitation process for the project. Given the low cost near-surface mining, we're looking at progressive rehabilitation and then repurposing those mined and rehabilitated areas in new agricultural industries, whether they be agroforestry or fish farms, for example. We're also doing a lot of work in country at the moment, community engagement, community programs, and looking at ways in which we can, I suppose, leave a lasting legacy, whether that be through education and health. So there's a huge amount of activity that's happening at the moment within Uganda. Looking at the corporate snapshot, market cap at the moment, we've had a little bit of strong trading over the last 2 days, trading at around about 4.2, 4.3 cents at the moment. Market cap's around about 145 million Australian. As of the end of June, we had a bit over 11 million in the bank. And obviously well supported by the top 20 who've increased their position over the course of the last 3 to 4 months. Looking at Makuutu a little bit more in depth, the scoping study we announced earlier this year defined the potential for up to 27 years life of mine if we're able to bring in that inferred resource. We announced results based on a base case, which included the 11-year resource, which underpinned effectively the indicated resource. We own 51%. We moved to 60% on the completion of the feasibility study. We also have a preemptive right over the remaining 40% of the project. So we're actively looking at the ways in which we can accelerate Makuutu into production.
Tim, sorry to interrupt you, but you own 51%, can go to 60. Who's the other owner of the project at this stage?
We've got, as far as the ownership of NWR Rare Metals, which is the Ugandan entity that owns the Makuutu project, the other 40% will be owned by a private South African investor company and 2 Ugandan investors.
Thank you.
So looking at effectively the strategic value of the project, we've engaged with a number of potential partners to look at the ways in which we're able to develop Makuutu. What we're seeing is tremendous appetite that's emerging from potential groups in Western markets who are now becoming more familiar with the appeal of the Makuutu basket, becoming more familiar with the appeal of ionic adsorption clays. And so we're progressing a number of avenues. Obviously, we have existing agreements that we've had non-binding MOUs with other groups. We're looking at ways in which we can develop Makuutu and de-risk the project moving forward. The infrastructure is already available at Makuutu, so we've got low-cost hydroelectric power that's already there. We've got the transmission corridor that runs immediately to the north of the tenements and south of where we propose to put the process plant. So that corridor is effectively 200 metres away from where we intend to put the process plant. We've got mobile phone communications, roads, rail, everything's already there. So it means that we're able to use that infrastructure to develop a low capital project at Makuutu. And beyond that, we've got immense exploration upside. Kerry, you touched on the new exploration licence that was we announced to the market earlier today. That's up to the northwest. We haven't done any drilling at that tenement yet, but certainly the phase 3 drilling that we did out on the eastern tenement, EL00147, was hugely prospective for the company, and that represents a substantial amount of long-term growth, and why the company is so bullish about the ability to potentially go from a 27-year life of mine to much longer.
And I think, Tim, it's important to point out as well that this is a clay-hosted deposit, isn't it? Which is low cost. So from an economic point of view, this is a really good style of deposit.
That's right, Kerry. Being an ionic adsorption clay, it's got a very low capital threshold to develop. It's modular in nature. It's very simple mining, very simple processing. There's no requirement to crack any rare earth minerals. And so we don't have any of those radionuclide issues that can plague some of the hard rock projects. So when you're comparing the projects against each other, there's no doubt that the ionic adsorption clays have been highly favourable, and looking at the Chinese experience as well, they produce a higher value basket that's full of all of the heavy and critical rare earths that you need. So huge appeal for the ionic adsorption clays. I mean, that's typified there by the basket, a basket that's completely dominated by the critical and heavy rare earths. Looking at the basket that we project to produce over an 11-year period that we announced as part of the scoping study, it's 73% critical plus heavies. So when you compare that against the other peers in the market, it's hugely attractive for groups that are looking to secure rare earths for EVs, offshore wind. It's got appeal for military and defence applications, for communications applications. And then on top of that, you've got the potential of scandium. So when it comes to supplying the critical raw materials that governments are looking to source into the future, it's got it all in one place. Looking at the scoping study that we announced earlier this year, based on that indicated resource base, we have an 11-year life of mine. We've explained it at numerous lengths, the potential there with the upside and bringing in the inferred resource. But on the 11-year base case, an extremely robust project, generating over $760 million of free cash flow post-tax US. You know, and looking at the internal rate of return and the NPV, the other thing that I would point to investors, given the scoping study that we reported and the sensitivity around that, a 10% increase in rare earth pricing suggested a 30% increase in PV. So it's a project that's, you know, heavily leveraged to upside in rare earths, and given the, you know, increasing demand in the future and declining supplies and resources of reserves of ionic adsorption clays in southern China, it does present one of the last future sources of heavy rare earths. So it's a great position for the company to be in. If we just have a look at the resource that we've got, and also explain a little bit about the new tenement that we've applied for and we announced today. EL 00257 is up to the northwest. We applied for that a couple of months ago based on some of the results of the phase 3 RAB drilling, which identified clay which was outside of the previously thought constraint, the basin. So I suppose taking away from that, the area does look extremely prospective for more clay there than we probably previously thought. And that's why we're very keen to secure that additional tenement. I touched on earlier EL 00147 out to the east. We were very excited by the results that came out of that, and coupled with the fact that we've already got a resource there of, you know, 315 million tonnes. You know, I think it's a fair estimate to suggest that this project will get substantially larger with time. Looking at our basket, this is one of the clear differentiators for us. It's our basket, it stands above head and shoulders above our peers. And being an ionic adsorption clay, it means it's the low capital nature, means it's a project that we can develop. It's not a project that's got to be unlocked by, you know, $500 million to $1 billion. We can go develop a project. The first module had a capital development of around about 89 million US. And then from that, we're into a high margin product. So a high margin product with a huge opportunity and upside associated and derived because of the heavy rare earth content within it. Looking at our schedule and our plans to bring Makuutu to production, we're focused on the feasibility study at the moment. We're looking at getting the feasibility study and the mining license application in by about this time next year, if not before. And then 12 months construction and looking at production, or starting production and ramping up first product in the first half of 2024. Looking at the infrastructure, touched on it earlier, the project location, we're 120 kilometres east of Kampala in eastern Uganda. We've got access to all the infrastructure, it's immediately there, low cost hydroelectric power. So that the project is really well supported by existing infrastructure. Just to touch on the refinery, so we have announced that we're looking at developing our own standalone refinery. We are evaluating a number of global locations. We're talking with a number of groups. What's emerging is the desire in Western markets for access to our product. So we're evaluating, you know, a new number of locations to be able to put our critical and heavy rare earths into Western markets, but also conscious of the appetite across Asia. So it really has a tremendous amount of appeal. Looking at the critical raw materials, this is the European Union's supply versus economic importance risk matrix. All our elements in our basket are highlighted there. They're all highly economically important and have significant supply risk. So from a strategic perspective, it's one of the most strategic deposits, you know, potentially being developed today. Then I suppose something we've touched upon briefly is the scandium opportunity at Makuutu. It's the third largest reported scandium resource globally. Given the potential for the project to increase, it's likely that that will get substantially larger. So we are looking at ways in which we can participate in the development of the scandium market. And we've put out some information recently about the opportunities we see there.
Tim, just before you go, what is, just remind us all, I'm sure most people know, but what is scandium used for and what's the market?
Okay, so scandium is used, probably one of the biggest opportunities with scandium is when alloyed with aluminium. It can produce a very light, very strong alloy with significant opportunity for use in automotive, aerospace, marine, rail. There's developments at the moment that are looking at 3D printing and being able to develop rockets. So there's a huge opportunity there that's potentially unlocked by bringing on low-cost supply. And I suppose that's the opportunity for Ionic. We see, huge potential with bringing on low-cost supply, and we're sort of working through that with a number of groups to try and understand the best way for Ionic to participate in that the development of the scandium market. We touched on previously, Kerry, the benefits of the ion consorption clays over the hard rock, and effectively, you can distill it down to a few points. Hard rock typically is much more capital intensive, a much higher capital requirement than clay. A clay basket will give you more value. It gives you a higher value basket. It gives you more critical and heavy rare earths. And it doesn't have the radionuclide issues that are associated with it. It also means that typically you produce a mixed rare earth carbonate, which goes straight into separation, so there's no requirement for cracking. And so it typically is a much simpler project to develop. So when we look at the value proposition and the opportunity we see at Ionic Rare Earths, I mean, we've got a long life, massive deposit that's likely to get substantially larger. We've got a resource that covers 26 kilometres of the 37 kilometres of mineralisation that we've identified. 95% of the world's heavy rare earths comes from China and Myanmar. And the reality is that going forward, the world needs to find new supplies of heavy rare earths. That creates a golden opportunity for Ionic, and one that we're fully aware of, and one that we're looking at, I suppose, participating fully in the supply chain. We've got a high value product. We're 43% magnet rare earths. So that's the full gamut of the rare earth magnets. So we're exposed to every opportunity there, and we're very keen on exploring that supply chain. We've got growing demand. I mean, the world needs more rare earths because it's going to consume more EVs and offshore wind. The Japanese call rare earths the seeds of technology, and that's exactly what they are. If you don't have the rare earths, you can't develop the technology. So it puts us in a very strong position, and it's all derived from our basket. And being a strategic asset, it's one of the last real ionic consorption clays that remain outside of, I suppose, China, southern China, and Southeast Asia. And given the rarity and the highly sought after nature of the ionic consorption clays, creates a great opportunity for the company to move forward. So that's a snapshot of everything we've been doing.
Well, it's a big snapshot, and it's quite a lot to take in, because rare earths, as you say, you talked about the basket, and there's lots of different ones. And by the way, ladies and gentlemen, while I'm chatting, make sure you put your questions into the Q&A chat box at the bottom of your screen, and I'll make sure to ask those questions of Tim. I've got a few, but I'm going to just start with John, who, John, I can answer the first one. What is your cash balance today? Tim, you answered that already. So, John, you must have been late to the party. It's 11 million. But John is
also... We'll have our quarterly will be out soon, which will give an updated snapshot as of the end of September.
Fantastic. But John's also asked, What have you learned re guidance going forward, given poor expectations management leading into your scoping study?
Good question. I mean, we're focused now on increasing the measured and indicated resource base for the feasibility study. I think now, I suppose we understand what the market expects, what the market's looking for. We think that, getting a measured and indicated resource base of 250 million tonnes or greater is a good target for the company, given where we're at. We could drill this thing out, but I don't know if that's the best use of our time and shareholders' funds. So we're really focused now on developing a footprint and a foundation to get Makuutu into production and provide us with, a springboard into developing the downstream opportunities which will be derived from the product of Makuutu.
John, I think, is getting, he doesn't want to necessarily know about the cash balance. He wants to know what the cash burn has been since 30th of June, if you are able to answer that. So it's kind of looking at cash burn month on month or per quarter, if you're able to answer that for him.
Yeah, good question. Off the top of my head, I couldn't give you a number, but we should have the quarterly out this week.
All right, John, you have to wait for the quarterly on that one. And he also asked, how long and how many dollars to get your resource to 70% indicated as per ASX release requirements?
Yeah, I'm not sure about 70% for a feasibility study. Feasibility study will need indicated resources or greater. So that's why we're focused on getting to 250 million tonnes of measured plus indicated.
Okay. A question from me. Oh, hang on. Got more coming in. Michael's asking, how are the latest drilling results progressing?
Yeah, well, we're waiting like everybody else in the mining industry. I mean, there's huge backlogs with the assay labs. Yeah. Last check, 12 weeks. We've got 3 batches. Yeah, we've got 3 batches making their way through. We've got a 4th batch on a plane out of Uganda. We should hopefully have all of our assays out, or all of our samples out over the next 2 to 3 weeks. And the plan is to get those assays and fold them into a substantial mineral resource update / upgrade by the end of the first quarter next year.
I've got to ask this one, it's not on the screen, but it's a query from a friendly retail investor. What are your personal expectations around the resource update in Q1 next year and the upgrading of some inferred resources?
I'm very bullish on the opportunity at Makuutu. I think we've done the work. We just now have to be patient, get the assays in, and work towards this large resource. So I'm hopeful that we'll see those numbers exceeded. But 250 million tonnes will give us a massive resource to then underpin the work going forward with the feasibility study. Beyond that, I mean, where do I think this could go? I genuinely think that this is potentially a multi-generational rare earth deposit. And so, 250 million tonnes will get us started.
Well, I'm going to go on to the numbers in a minute, but before I do, just you've got first mover advantage, I guess, in Uganda. I mean, who else is out there at the moment? Do you see that your deposit, your rare earth deposit, it has got that first mover advantage? Because I think a number of investors might look and say, oh, Uganda, how good is it over there? How safe? What's it like as a jurisdiction? And how supportive is the government?
Yeah, look, okay, so supportive. The government, we've had great discussions, great support. We've worked through the recent drill program with the support of the Ugandan government. We've navigated COVID restrictions. It's been extremely collaborative. As far as other players in Uganda at the moment, there's ourselves, there's NWR, there's a couple of other groups up in the north of the country who've been looking for sulfides. There's industrial minerals that have been developed by Indian and Chinese interests. I think realistically, there's a lot of opportunity in Uganda, but I don't think the wider investment community is fully up to speed with the opportunity there. I think, we've done a little bit of work trying to understand the perceived risk of Uganda. We've had a look at the recent World Risk Report, which actually has Uganda on par with Namibia, and ahead of some more, I suppose, more favourably considered jurisdictions. So I think, the opportunity is certainly there with Uganda. It's just the investment community is not familiar with it.
Yeah.
And I think that once we do develop Makuutu, we get into production, the investment community can see a positive example, then there'll be a number of groups that'll flood in and look at developing other, exploration opportunities or, projects that have been defined. I think we're in a tremendous position to get Makuutu into production and be the first, publicly listed mineral development in Uganda for a very long time.
You talked about a capex of, I think it was 89 million. How are you going to fund that? What's your thought process on that?
Look, there's lots. Yeah, look, Kerry, there's lots of options on funding a project as strategically important as Makuutu. And those discussions that we're having now, you can't build downstream rare earth supply chains without rare earths to begin with. So it's a tremendously powerful position for the project. It's got the full gamut of all the rare earths that certain industries and governments need to develop secure and independent supply chains. So it's got substantial appeal. We're having discussions with lots of groups about how we potentially fund the project. First things first, though, we're going to work through the feasibility study. We'll work through the downstream. We'll, try and link this all up and provide, a strategy for potentially, mine to market and maybe beyond. So there's a lot of work that's got to go into that before we can provide, I suppose, the market with a bit more definition around what it looks like.
Matt's asking, Tim, any discussions with Iluka, given they are currently completing their DFS for stage 3 in Aba?
Look, can't
say,
comment on who we're speaking with or the groups we've spoken with. Fair to say that we've got huge appeal, but people and the market needs to understand our basket's very different. So, just because somebody's developing a rare earth project, it's important to understand not all rare earths are created equal. And a basket like ours is, substantially more value and more strategic importance than maybe some of the more hard rock baskets. So, yeah, there's a lot to potentially play out in that space.
Some are equal, but others are more equal, if you like.
Well, that's it. Yeah, look, there's a number of ways you can sort of cut it, but I do like the seeds of technology analogy because it is. You can't develop technologies without these rare earths, and realistically, it's your magnet rare earths and your heavy rare earths that's where the game is. Absolutely.
Satish is asking which rare earth element is likely to be most abundant in your tenement. Seems to me like it's a basket of rare earths. There's not one that's going to be most abundant.
Yeah, look, as far as abundance, there's heaps of cerium and lanthanum. Which are, they're commonplace across all rare earth deposits. Importantly, they don't report in the same ratio to the basket. So we don't have a huge amount of them that dilutes our basket. As far as value, the value from our basket, it's dominated by the magnet rare earths. Neodymium and praseodymium make up probably about 50% of the value of our basket. The heavy magnet rare earths being dysprosium and terbium probably add another 35, 36% of our value, and then sprinkling a few others, and you've got a very valuable product.
Now, Tim, we know that rare earths has been, it's been front of mind for a few people, given the fact that we're all heading into this zero carbon EV revolution market. I'd like your view, Tim, on the market and the pricing, because you've done your scoping study clearly on certain numbers. Do you think that the prices of rare earths are going to be considerably increased over the next even 1 year or 2 years?
Oh, look, I think, I mean, we had a look at the rare earth forecast prices from a number of different providers earlier this year. We ended up using the Argus numbers. They provided estimates out to 2030, right? And realistically, it's very difficult to predict what's going to happen out beyond that, because we've seen certainly the adoption of EVs, it's gaining momentum. Predictions around offshore wind, I mean, it's almost like every week there's another offshore wind farm being added to commitments. I mean, simply put, there's not the magnet rare earths there for everybody to have wind farms and EVs. So if you take a step back and say, well, realistically, what's going to happen with rare earth pricing? I mean, I'm pretty bullish on this, but I can't see it going down. And that's why I look at this and I'm extremely confident with the opportunity at Makuutu, and I touched on it earlier, a 10% increase in rare earth price, you know, potentially has a 30% impact on project NPV. So, you know, what happens beyond 2030? You know, we've got a project that potentially has a life of mine that well exceeds 2050. So to try and put a number around what the value is of the project now, it's extremely difficult, because the assumption is that those heavy rare earths are going to be there in supply beyond 2030. I mean, I just don't know where they're going to come from. All I know is that we've got a lot of it at Makuutu.
Quick question on the number of shares on issue, Tim. A lot of shares on issue. Would you look at a consolidation further down the track or even soonish?
Look, I suppose right now we're just focused on getting the scoping, the feasibility study completed, positioning the company for growth, looking at downstream opportunities as well. There's a number of things that could happen over the course of the next 12 to 18 months, Kerry. Never say never, but you know, you've got to, I suppose, assess the opportunities when they present themselves.
Final question, Tim, and then I'm going to let you off the hook, but it's a massive project you got. Leanne says, how do you intend to handle the low level of radioactivity in your clays?
We leave it there.
There you go. Nice answer.
Well,
Leanne?
it's pretty straightforward. I mean, we've banged on about this for quite some time. This is one of the advantages of the ionic adsorption clays. And this is why, you know, it's got so much appeal.
Tim, it's a fascinating project over there in Uganda. And as you say, I think you've got first mover advantage. You're only just getting started. Congratulations on the awarding of the exploration license only today, which gives you expanded area. Lots of work to do and lots of news flow to come. Thanks for joining us at the NWR Investment Series today.
Thanks,